Let's take a look at some charts on Monero for this week's article on Brave New Coin. So Monero is a true default privacy coin, meaning the addresses and details in those addresses are obscured during the transaction. I think if Satoshi were to go back in time and fix some things that he or she or them didn't include in Bitcoin, default privacy would definitely be among the top priorities. On the other hand, it's kind of grateful that Satoshi didn't include these things, because privacy coins have difficulty being listed on exchanges or adopted, mainly because of global regulatory concerns, government intervention surrounding privacy tokens, privacy coins, specifically Monero and Grin, really. Because the others aren't. They have privacy capabilities, like I say on the graph here, but they're not exclusive default privacy, so users have to opt in, and on exchanges, you aren't given the choice to opt into privacy for these privacy coins, probably because they're worried about regulatory concerns from banks, which we've seen with Zcash multiple times. So I think everyone's preferred method for privacy is default privacy. It's just, that way nobody can mess with it, right? If we look at a few metrics here: market cap, daily transaction volume, fees, transactions per day, active addresses, GitHub commits. Monero's near the top of all of these. You can't see the transaction volume on Monero, you can't see the active addresses on Monero, but my guess is both would be quite high. Probably not as high as Dash as far as active addresses. Dash has CoinJoin type stuff where it's kind of like on-chain mixing. Monero has similar on-chain mixing. So that goes back to the conversation of, okay, if it's an address used for privacy that's mixing, is it truly the same as an active address that's changed value? Typically an active address is an address that's changed in amount that day. So depending how it's considered for these privacy coins, those active addresses might get goosed up a little bit. If you look at fees, Monero is quite high. Monero has high block size. There's high demand for block size. Potential scaling stuff issues there as well, even with bulletproofs. And this Dash transactions per day is, again, I think related to just the way the chain handles privacy and all the other stuff that's going on with Dash. So overall, Monero's decently at the top here for most of those that you can see the values on. Monero's hash rate and difficulty increased dramatically after the November 2019 hard fork, which changed the mining algorithm to RandomX in a bid to decrease ASICs on the chain, which was likely successful because it makes CPU mining more advantageous than ASIC mining. So you can't treat the post-November 2019 hashes the same as the pre-November 2019 hashes, because they're apples and paperclips, so they're completely different things. So even though this looks like, oh, it's a new all-time high, it's really just completely different. So it's great that it's increasing. There's a lot of ransomware, malware, botnet activity for Monero because of the default privacy. And I was reading, there's quite a bit this year. There's some in 2018, 2019. We had WannaCry, which was BTC stuff, but there's just always perpetually botnets and ransomware going on all over the world all the time. It's just relentless. Monero plays a big role in that as far as a way for the botnets to get paid out, or this ransomware to get paid out. If you look at Monero's hash rate, it's a bit concerning that 2 pools have 63%. 3 pools have 72%. So that's not great. You want to see more decentralization here, because especially in Monero's case, there are potential ways to de-anonymize the chain if there are very few miners or nodes that are handling the traffic, that sort of thing. So I'd always like to see this on any chain that's proof of work be more distributed than it is. And it's gone back and forth over the past few months. It was more mixed a few months ago, and it looks like it's getting more centralized now. So that's a bit of a concern. Like if this gets bigger, closer to, if one of these gets closer to 50%, 51%, then there's a real concern of shenanigans on the chain. 51% attack, that sort of thing. If we look at the inflation rates of BTC and Monero in the red and yellow here, and the current supply, total supply, green and blue, you can see Monero and BTC follow sort of the same inflationary path, disinflationary path, sort of the same total supply. Monero's inflation is just higher than BTC, 2.2% versus like 1.8%, something like that. And the supply is just a bit more. And Monero has an indefinite supply to sort of ensure chain security. And this is another point of contention with the Bitcoin people as far as, the whole monetary promise of a fixed supply has brought a lot of people in to Bitcoin. But at the end of the day, if it doesn't secure the chain past 2061 or whenever the last block reward is mined, then it's all for naught, really. So the idea with Bitcoin is that the fees will increase enough to support chain security. And people hope that's the case. It's just hard to say. It's hard for anybody to know, Whereas in Monero's case, there will always be a block reward to ensure chain security, but that also means that there isn't a fixed supply, so there's some store value issues there compared to BTC, but it's very minimal. It's not like a massive indefinite reward, but it's indefinite. If you look at Monero's transaction count and average difficulty for the chain, what I've said in the past is these spikes in difficulty tend to be related to spikes in transactions per day. My guess is that there's some botnet activity related to the transactions per day. And recently, it spiked, but this is completely different than the previous pre-November 2018 is a different animal, so you can't really compare it, but transactions per day continues to increase. Hash rate, mean difficulty continues to increase. If I had to guess, botnets probably are having easier time with CPU being advantageous over GPUs being advantageous. If it's a botnet, you're using somebody else's resources, so you don't really care how efficient it is, right? But if it's more efficient than it used to be, you're probably going to be incentivized to increase botnets more so than you were in the past because there's a bigger reward. There's a bigger pot of gold at the end of that rainbow, So it's bullish to see transactions per day increasing month over month, week over week, certainly. And I'm not really sure what all these spikes and drops are. This, again, could be botnet related. You don't see this in organic transaction activity. You see it when one entity abruptly stops or returns to transaction mining rewards, that sort of thing. So it's interesting, to see all these massive spikes. This is a 7-day average, so it's not even, on a daily average, it looks even crazier than this. But it's still bullish. Activity on chain is increasing. So if we compare the fees of all those privacy coins, Monero is certainly up there in cost per transaction. Pivx is just a mystery because nobody really uses the chain, yet it's super expensive to transact on the chain. So that almost certainly is scalability issues, problems. They don't have the latest technology. There's something going on here that doesn't allow the prices on the chain to go down, despite very, very little on-chain activity. And even with all those transactions and addresses on Dash, the transaction fee is still lower than all the rest of the privacy coins. If you look at the mean block size, you can see that Monero and Dash have the two highest block sizes here. So Monero's high block size can explain its fees, certainly. And again, Pivx, back to my previous point, the block size is extremely small. So there isn't a demand, there isn't a great demand for block space. There's high supply. There's plenty of real estate to send transactions, yet prices keep increasing. It doesn't make sense to me. There's something weird going on there. And then DCR and Zcash is in the middle bottom of the road here as far as on-chain activity. If you look at Google Trends for Monero, the word, it's pretty much flat over the past 2 years. You're going to see this with most coins that aren't doing too much. Monero isn't getting listings or press in general. And if we zoom in on that past 2 years, it's kind of been just flat. There hasn't been really an organic uptick in activity there on Google. Switching gears to technicals, we have Bitfinex long shorts, yearly pivots, VPVR, 50, 200 EMA, RSI, and volume. So these VPVR bars always stick out to me when they're distinct, these high volume areas. That's kind of wedged between this zone of like 50 and 100. I said that in the article, but it's going to probably continue to consolidate between these levels until a decision is made. That isn't necessarily mean that we're going to go up or down, but if it's bullish, if it's really bullish, it's going to have to break 100, which is a massive volume area. There's a yearly pivot there, psychological resistance going from 2 digits to 3 digits, all that sort of thing. No divs on RSI. Bitfinex long shorts are kind of uninteresting as far as activity. Longs are certainly up since March, up since July, but really it's all about that $100 level. 100, 120, 150, horizontals, yearly pivots, that sort of thing. But the 50-200 cross is bullish, so bullish momentum should continue. The cloud also likes the trend. Prices are above the cloud, above the TK lines, lagging spans above price, above cloud. All of this looks extremely bullish. Most coins have surpassed their 50% retrace now from the February-March drop, including Monero. So the next stop is always just the previous high, around $100. This looks very similar to kind of ETH pre-breakout and a few other altcoins. Almost looks more like Tezos, but overall it's bullish. It should continue to be bullish. There's no real concern for reversal there. And then lastly, on the Monero BTC pair, you can see how much more medium the trend is here. There's been a bear crash since 2018 on the 50 and the 200. Price has really struggled to stay above the cloud, and it's got all this upside resistance, just a ton of upside resistance. So again, I like the psychological level of 0.1 in the next 6 to 12 months. But right now the trend is still neutral. It's an interesting shape structure because it looks like this head and shoulders thing, but trend says it's about to flip bullish for the first time in 2 years. So it's going to need some more time. Wait and see. 0.85, definitely a big level. 0.1, 0.125, 0.17. These are all big levels on the way up. It'll be interesting to see how the post-2019 RandomX hard fork will affect things, because once that happened, price kind of sideways out. So I'm wondering if there was some unknown something on the network, some unknown that was changed with that, or if something else changed. It could be anything, because it's a privacy coin and it's default, and you don't know what's going on that chain. So anything could be happening, really. You could have infinite supply and you never know, really. That's one of the issues with the default privacy coins. But technicals look good. Fundamentals look good. The market has accepted RandomX. The miners have accepted it. I don't see any complaints about it. So from a medium to long-term perspective, to me, Monero looks pretty decent for some upside over the next 6 to 12 months.